Welcome back to Market Fatafat on ET now, and let's keep it going with all the stocks that are buzzing in trade today. And before that, let me welcome on board Nirav Chheda from Nirmal Bang Securities, who will tell us his top favorite picks during the show. Hi, very good afternoon, Nirav. And coming to you for your first stock, you have picked up a counter that is showing stellar moves today. That is up 7%. I'm talking about India Nippon Electricals. Tell us what sort of a target that you are looking out for this one, because in the past 6 months, the stock is already up 30%. So how much more upside are you expecting?
Hi everyone, and thank you for having me again. This stock, if you look at the sector has done very well, but for some reason this stock hasn't really moved much. Yes, it has come down, come up from 350 odd to about 480. But looking at the longer term charts, it has been in this range for quite some time, from the last couple of years. Finally, I see volumes coming back into the counter, and lot of buying has happened. A breakout has come in above that 470 odd levels now. So very likely this stock will now move up very aggressively. It's already up about 7-8% today, but I think this can go up at least 20-25% in the coming time. Your target should be around 550-600 odd levels. So look to buy the stock at current levels. Even on dips, 450 should be your stop loss, and about 600 odd can come in very soon.
Okay, keep an eye out on those levels for India Nippon Electricals. But let's move on, talk about another earnings candidate, and that is Himadri Specialty Chemicals. Now, when you look at it in terms of the numbers, we're seeing the revenue has seen a decline of around 9% on a year-on-year basis. Revenue came in at 951 crores versus 1047 crores last year. In terms of the net profits of the company, on the other hand, that has seen a sharp jump of 123%. Operating performance seems to be strong as well. But yes, what is the impact coming in was on the top line, where we saw a sharper decline. And seems like the street is not too happy with the numbers, and Himadri Chemicals is also down in trade as much as 1.6% as of now.
Okay, moving on then to the next counter, that is from the pharma space. Let's shift focus to Eris Life Sciences, because that counter is up after HDFC that counter was actually up after HDFC Mutual Fund bought almost 8.3 lakh shares in a bulk deal on Tuesday. That stock actually made a gains for the fourth straight day, and that's why you are seeing that the counter is buzzing, where HDFC Mutual Fund has raised its stakes, and that is now sitting at its highest level since November 2nd. So that's the counter why Eris Life Sciences is in focus today.
Okay, surely keeping an eye out on that one. It was surely buzzing in trade, and now also holding on to almost 1% of gains, and not bad over there as well. Let's move on and talk about the power stocks. Those have been in focus as well. We have a brokerage note also that has come in on the power sector. But before that, let's just go across to Nirav, and he's picked up SJVN for us as well. And Nirav, on the charts, what is SJVN indicating to you? 44% in the last 6 months, and especially this return is coming post-April when you look at it. So now going forward, what should we be expecting from SJVN?
This stock is known for not moving much, and look at the chart. In last 1 year, this stock has doubled. So yeah, it has really moved a lot, and a breakout has come into this stock at about 40 odd levels. It is a rounding formation breakout, long-term breakout. The breakout's target comes to around 70-75. So there is good scope for this stock to move up. Look to buy the stock at current levels, and on dips, 42 should be your stop loss. This stock can actually move up quite aggressively. So 70-75 is where you can look to book stock.
Technical targets you should be looking out for SJVN. But Ashisha, coming to you, Havells is also seeing a solid gains in today's trading session. That an F&O counter up more than 2%. Tell us what's the news flow.
Havells is in focus for the second consecutive session. Yesterday, UBS upgraded Havells, and today Motilal Oswal has come out with an initiating coverage note on this counter with a buy rating and a target price of 1580. Now, they say that the company is powering growth with a well-diversified product portfolio. Lloyd is gaining market share in the RAC segment. They are focusing on building their distribution network and in-house manufacturing. They also say that earnings and return ratios are expected to improve from here on. And Motilal Oswal says that they expect EBITDA CAGR to grow at about 27% and PAT CAGR to grow at about 29% over the period FY23 to 26. So on account of this note that has come in, the stock is buzzing in trade today. Important to note that the stock has been buzzing for the last many trading sessions. In fact, in the last 5 days alone, the stock has gained nearly 7 to 8%. Today, on the back of Motilal Oswal's initiating coverage note, the stock is up over 2%.
Absolutely, and let's not forget Havells will be reporting their numbers tomorrow as well. So again, maybe third consecutive day that we should be keeping on focus for tomorrow, Havells as well. But let's move on and talk about Nirav's next stock, and that is coming in a bit on the defense play side. Cochin Shipyard, Nirav, in terms of the charts and technicals, what is the expectation from this one? 30% return in the last 6 months, 656 is what the counter is currently at. Would you still suggest a buy, or maybe just hold on to it or book something like your profits right now?
I seem to be picking stocks which are up 30% in the last 3 to 6 months already. So, I don't know, probably a coincidence, but this stock, Cochin Shipyard, HPR Mazgaon dock has really moved up quite significantly. Look at the chart. It is beautifully placed, rounding kind of a formation, and the breakout for which is placed around the 670 odd levels. It did touch this level a couple of days back, but it has come down, so it's a little early call. Look to buy the stock on breakout of 670. Once that breakout comes in, you will see this stock really moving up quite significantly. And the pace at which it will move will be like Mazgaon. So I believe this stock can go to 900, 950 odd levels post this breakout. You can keep a stop loss of around 620 odd.
900 is what Nirav is targeting on Cochin Shipyard. But let's move on and shift focus to ICICI Lombard. Harsh, tell us why this counter is in focus.
What we're seeing is healthy growth numbers coming in from ICICI Lombard. We saw the premium growth of around 19%, where industry and the larger industry in which ICICI Lombard functions grew by around 18% thereabouts, which is general insurance. We also saw the combined ratio come down. There is a guidance that the combined ratio, which is the loss ratio and the expense ratio combined, will look at around 102% or thereabouts by FY25. So you're seeing that trajectory starting to play out despite cyclones, despite flooding, etc. So despite all of that, you're still seeing that the combined is coming off. So that's another positive. Within the growth pocket, we're seeing motor grew just 5%, while health grew 40% year on year. So really gunning that health engine there, ICICI Lombard. We spoke with the management as well. They were quite bullish with regard to how they're looking at future growth. They are also suggesting that the expense of management guidelines favors the more the more conservative insurance companies like ICICI Lombard, and therefore FY24 onwards there will be a tightening of screws with regard to pricing across the board, which will aid ICICI Lombard going forward.
Okay, let's move on and talk about those power stocks which I was going to talk, which I spoke to you all before. SJVN, Nirav has covered that on the technicals, but I'm going to tell you all why I picked up this one, because we have a Goldman Sachs note that has come in on the power sector stocks. Now, they have initiated coverage on Tata Power with a sell rating given a target price of 190 rupees per share. You're seeing a decline already coming in Tata Power over there as well. SJVN, they've initiated coverage with a buy rating given a target price of 55 rupees, while NTPC also they have initiated coverage with a buy rating and a target price of 265 rupees per share. Now, overall, in terms of the power sector, what they're highlighting is that the transition-led business model is seeing an upgrade, rising peak deflects to drive the re-rating, and NTPC, they believe, will emerge as the winner in the transition and has an advantage of low-cost debt as well as a rising peak shortages, which will re-rate the legacy thermal business as well. Now, also SJVN, they too are quite bullish on this one. An exponential RE growth is what they are targeting. Low cost of debt, medium-term earning boost from commissioning of the 2 large plants, and growth optionally from the hydro and pumped hydro projects as well is something that could work out well for the company. Other than that, Tata Power, they see medium-term earnings, a headwind coming in on that because of the global coal cost, seeing a decline and limited growth catalyst for the renewable business, and that is why a sell rating on Tata Power. So SJVN, NTPC, buzzing in trade, thumbs up coming in from for Goldman Sachs on SJVN as well as Nirav as well. So let's keep an eye out on that one, Shrishti.
Okay, moving on, and let's shift focus to Newgen Software Technologies that has climbed as much as 6.5% to the highest level seen in the last 2 years after the automation provider reported an order worth about 34 crores for the end-to-end trade finance solutions, and that's the news flow coming in on Newgen Software. That stock has seen a good run-up in the recent past, and today itself on the back of this new order win, the stock is seeing healthy gains. At one point in time, it was over 6.5% gain is what we were seeing, but nevertheless has cooled off from its day's highest point, but still holding a gains of 4.6% right now.
Absolutely, Shristi, and I believe they also reported their numbers a short while ago as well. And in terms of numbers, didn't seem anything exciting. Just before we came here and started the show, I think they did report their numbers. So on the back of the numbers, the sharp spike up we saw because of the order win. But now we're seeing a bit of a correction there. But yes, keeping and holding on to those gains of 4.6% as of now, and that is Newgen Software for y'all. Let's move on and talk about the next one, and that is stock number 23. We have steel strip wheels, and Nirav, what are we expecting from steel strip wheels? Are we expecting a good run up? Now again, this one is also up more than 30% in the last 6 months. It's actually a 50% uptick, Nirav. So what is your view on this one? Should we finally book profits here, or should one actually continue to hold this?
Oh no, so in the last 2 years, from 2021 on to 2023 June, this stock was in consolidation, and finally a breakout has come in the end part of June at around 180 odd levels, and post that it is moving up. I believe this stock has just started. It can come up towards 260 odd levels pretty soon. So your near-term target should be around 260. You can keep a stop loss of 215 for your longs. If you want to hold from a medium-term perspective, 300 can be achieved.
Steel strips, but moving on to the next counter that is in focus, and stock number 24 on to the result side. Let's shift focus to Jubilant Pharma. Why that company just reported its numbers, and they look to be a weak set numbers this time around, because on a YOY basis the margins have seen a decline, and that's post this disappointment the stock has seen a sharp fall. In terms of the revenue, that is actually up 9.3% on a YOY basis. 1587 crores is what the company reported. The net profit being reported at just 6 crores, and that's down 86.5% on a YOY basis. We'll try to find out the reason why there has been a sharp decline onto the profit figure, but also there has been a disappointment on the margin front. Despite the growth in the revenue front, the company margins, EBITDA margins have actually declined to 10.7% versus 13.3% on a YOY basis, and also the EBITDA is down 12% on a YOY basis to 170 odd crores on the back of weak set of numbers from Jubilant Pharma. We're seeing a sharp decline on the net profit as well as a fall in the margins. This counter is definitely weak, trading weak as of now.
Absolutely, Shrishti. Let's keep an eye out on that one. More details, obviously, we'll have to read the finer print coming in on any releases from the company. But let's move on and talk about Reliance, Ashesha. Why have you picked out Reliance for us today in trade? What is the main reason for it being in focus?
Well, yes, the stock has been in focus on account of that merger news for the last many trading sessions, and today is the last day to buy shares to be eligible for Reliance Jio Financial Services shares. The ratio was 1:1. For every one share that is being held by shareholders in Reliance Industries, one share of Reliance Jio Financial Services will now be issued. And on account of this demerger, all F&O contracts will expire today, that is on the 19th of July. Apart from this counter is also in focus because it will be reporting its numbers later this week. On a consolidated basis, EBITDA is expected to decline by about 1% on a year-on-year basis on account of weak refining margins that the company had to go through in the quarter gone by. Profit after tax also could, on a sequential basis, decline by as much as 15%. But on account of this demerger news, the stock has been charged up. In fact, over the last 1 month, the stock is up nearly 10%. Today, of course, not doing much, sitting with a cut of nearly 0.3%.
Okay, moving on, and let's shift focus to banking major ICICI Bank. Nirav, all these banking counters are seeing some bit of a rebound in today's trading session. How do you see ICICI's place right now? Because the stock has been nudging higher, but continuously facing some pressure at the elevated levels, not very far from 1,000 levels. So is that on cards?
So, yeah, definitely, this stock has moved up. There's no doubt about it. And I believe, very important consolidation has taken place in this stock, where others were performing very well, but this was actually in a small range. A breakout has come in yesterday, and that breakout has come in at 955 odd levels. Post that, it almost reached 1000 odd, but it is near 970 odd. I believe this stock can be bought from a near-term perspective, which about near the all-time highs already. You can keep a stop loss of around 945 for your longs, and this stock can move up towards 1040, 1050 pretty soon.
Okay, moving on then, and let's shift focus to Lemon Tree then. And Harsh, coming to you for this one, tell us why Lemon Tree Hotels is in focus today.
Well, Lemon Tree in focus largely because they've announced a licensing agreement for a 72-room property at Gomti Nagar in Lucknow, Uttar Pradesh. Now, of course, that's a positive, adding to the already expanding list of hotels that Lemon Tree has been incorporating or has been licensing with different players, as well as trying to purchase other properties as well. So Lemon Tree largely in focus because of that. The hotel is expected to be operational from Q3 of FY26, as I did say, 72 rooms and a banquet hall, meeting rooms, restaurant, bar as well. So across the board, it's a full-fledged hotel for Lemon Tree, but operational Q3 26. We saw that initial spike on the stock, 1% higher absolutely at the start of trade, after which it's kind of cooled off. It's up around 0.5% as we speak.
Okay, moving on, and let's shift focus to Hindustan Zinc now. This particular counter is also in focus, as sources still, the report suggests that the government still plans to do an offer for sale for the stake sale in Hindustan Zinc this fiscal year, but the government is unlikely to sell shares in Hindustan Zinc in the near term. So this fiscal year, there is a possibility. But as of now, when we talk about the near term, then it doesn't look so, because the report suggested that the government plans to sell its 29% stake in tranches, starting with a stake sale of 5%, and Vedanta Group actually holds another 64.9% stake in Hindustan Zinc. So government has been looking out for buyers, but in the near term, sources say that it is unlikely that we can actually see the government selling their stake in Hindustan Zinc, and that's why this counter is in focus today.
Okay, let's move on to the next one on the charts. And Nirav, you picked out Rolex rings for us. In terms of technicals, what should we be expecting for Rolex rings? Is it a buy call again coming in from you?
Yeah, it's a buy call, and before I say anything, if you buy 1000 shares of Rolex rings, definitely you will be able to buy Rolex in about 5-6 months. So I believe this stock can double from here. This stock can move up towards that 4000 odd levels in the 6 to 8 months in the coming period. It's a beautiful breakout. After a long time, this breakout has come in. It's been a long time coming as well. The breakout is coming at 2150. You can keep stop loss of 2100 flat and hold this stock. This stock can move up towards 2800 odd levels in the near term, and in the medium term, as I said, it can double.
Absolutely. Medium term, it can double. And viewers, just to give you a disclaimer, that when you see Nirav, he's spoken about Rolex ring before as well, and he had told us that one should, some point of time, be able to buy a Rolex. Now he's confidently coming and telling us in the next 6 to 8 months, if we buy a good amount, maybe doubling of that one, and we could be buying a Rolex coming in as well.
Maybe 1000 shares.
Yes, 1000 shares, and we could buy a Rolex coming in there in the next 6 to 8 months. So keep an eye out on that one. But let's move on and talk about CIE Automotive. Now this came out with these numbers. Now when you look at it on the face of it, seems like a strong number, but compared to the analyst estimate, it is actually down. I'm talking about CIE Automation or Automotives, and that is below estimates in terms of what the street was expecting. Weaker growth in both the geographies, that's India as well as Europe. And yes, like I said, the consolidated revenue, that's a growth of 5%, but we saw a growth of only 4% in India and 6% in Europe. Europe also saw a bit of a slowdown coming in, which mainly impacted the company's overall performance in terms of the top line. Though the EBITDA performance was strong, 21% growth there. Margins also was a bit of a surprise that came in there, but the EU business was primarily which saw a bit of a slowdown. So let's keep an eye out on CUI or CIE Automation, and that is a stock that is in focus today.
Okay, so on the back of the earnings, I believe that it was up in early trade sessions, but then it drifted lower. But nevertheless, let's move on to the next counter in focus, and that is BKG Foods, as this particular counter hits an all-time high levels today as they buy a stake in another company. The stock, if you can see, is up around 4%, as the company is said to be buying 49% stakes in snack maker Bhujia Lalji for 4.9 crores, and BKG Foods said the objective of the acquisition is better expansion of their business and to further strengthen the position of the company. The company also bought 396 compulsorily convertible debentures of the snack maker for 2 million rupees. So that's the update coming in on BKG Foods. This particular counter has been holding its gain since morning.
Okay, let's move on and talk about the next one. And Ashesha, yes, we know there was a block deal that happened yesterday during market hours and rallies. Talk to us about the sellers of this. We did have a fair idea. I believe it was Tata Chemicals which bought stake. But who are the sellers of this stake then?
Well, yes, Tata Chemicals has bought additional 5% stake in the company. They already held about over 50% stake in the company. And with this additional 5%, the stake has gone above that 55% mark. But important to note that Rekha Rakesh Jhunjhunwala has gone ahead and trimmed her stake in the company from 7.75% stake because of the sell that she has done yesterday. The shareholding has now gone below that 2% mark. It is now standing at about 2.2%. So yes, important shareholding changes that have happened. Tata Chemicals has gone ahead and upped their stake in the company. The stock is in focus for the second consecutive session. Now as we speak, it's down almost 0.4%.
Okay, moving on, and let's shift focus to RK Forgings now. Tell us, Harsh, why this particular counter is in focus and what's the news flow?
Well, yes, so they've agreed to expand capacity, or rather they've confirmed that they've commenced commercial production for the expanded capacity that RK Forgings was all set to make. They've actually expanded capacity by 13,700 tons per annum of RA shaft press line and 10,100 tons per annum of the 5-inch upsetter at RK Forgings Limited at the existing facility. This will enhance production capacity for the company by 23,800 tons per annum. So that's a very solid increase. Total production capacity now stands at 210,000 TPA tons per annum. That's largely keeping RK Forgings in focus. Stock is up 1% on the back of that.
Let's move on and talk about stock number 34 for today and putting the spotlight on Apollo Pipes, Nirav. How is this one looking like on the charts and technicals? Again, you know, most of the stocks, when you look at it, they have seen a sharp run up actually coming in since April. And that is why we're seeing that, you know, since April, the chart is just going up and away. Almost all of them have managed to gain that 30-40% returns only in the last 3-4 months. For Apollo Pipes, now what's the chart indicating?
Yeah, so again, good coincidence. Probably, you know, I'm looking at those charts which have witnessed good breakouts. That's why, you know, that 30% figure keeps coming in. This chart also is a very beautiful chart. You know, post 2021 October, this stock has witnessed a breakout just a couple of weeks back. And it has started to move today. I believe the stock has got enough momentum to move up towards the 820, 850 odd level. So look to buy the stock at current levels. The rounding formation breakout has come in as well. You can keep a stop loss of 720 for your long.
20 is the stop loss and stay invested in Apollo Pipes. But moving on, and let's focus to Avanti Feeds now. This particular counter has been buzzing as the company forays into the pet care business and incorporates a subsidiary company to get into this particular business, and that's why the stock is seeing an up move in today's trading session. The company has announced its foray and the wholly owned subsidiary, that is Avanti Pet Care Private Limited, is the new subsidy that will be taking this new operation. The new entity will deal with the manufacturing and trading of the pet foods, feeds, medicines and other pet healthcare products like shampoos and other grooming products that the company said in the exchange filing, and they expect to complete the foray into the pet care product business in the next 2 years. The newly subsidiary is estimated to complete the project implementation in the next 2 years. So that's the update coming in from Avanti Feeds. The stock is holding gains of 1.5%.
Absolutely, and a lot of other FMCG players have. So actually a lot of interest is coming in this pet care business. So it's going to be interesting as a space and as a sector how that actually shapes up. But that was stock number 35, viewers, and with that we were absolutely out of time on this edition of Market Fatafat. So thank you so much, Nirav, Harsh, as well as Ashesha and Sumit for joining in with us. It's a goodbye from Shrishti, myself, as well as the team who put this show together. But don't go anywhere. Closing trades will take the action forward.